Hey there, future Forex gurus. Are you ready to embark on a journey that could change your financial future forever? Ever dreamt of making money from your couch? Picture yourself sipping coffee, lounging comfortably, and still making profitable trades. Imagine profiting from the fluctuations of the global economy, all while wearing pajamas. No need for a suit and tie, just your laptop and a keen eye for market trends. That's the power of Forex trading. It's a market that never sleeps, offering endless opportunities around the clock. It's a thrilling world where fortunes are made and dreams are realized. Every trade is a new adventure, a chance to learn and grow. Intrigued? Let's dive in. Forex, short for foreign exchange, is the largest and most liquid financial market globally. With a daily trading volume exceeding $6 trillion, it's a market that dwarfs all others. Trillions of dollars change hands every single day. That's right, trillions. This immense liquidity means you can enter and exit trades with ease. This dynamic market offers an unparalleled opportunity for individuals to participate in this global phenomenon. Whether you're trading major currency pairs like EUR, CHF, USD, Euro, United States dollar, or exploring exotic ones, the possibilities are endless. Whether you're a seasoned investor or a complete newbie, Forex welcomes everyone with open arms. It's a community where knowledge is shared and success is celebrated. So, are you ready to take the plunge and explore the exciting world of Forex trading? Okay, enough with the fancy words. What exactly is Forex? Simply put, it's the process of exchanging one currency for another. Think of it like this. You're going on vacation to Europe. You need to exchange your US dollars, USD for euros, EUR. Now imagine doing this on a massive scale, aiming to profit from the constant fluctuations in exchange rates. That's Forex in action. That's the essence of Forex trading. You buy a currency when you believe its value will rise and sell it for a profit when the time is right. It's like buying low and selling high, but with currencies. Let's break down how this currency exchange dance actually works. Imagine you believe the euro EUR will strengthen against the US dollar USD. You would buy EUR USD, hoping the euro's value increases. If your prediction is correct, you sell the pair later at a higher price, pocketing the difference as profit. Of course, like any market, Forex involves risks. If the euro EUR weakens against the dollar USD, you might face a loss. But don't worry, we'll delve into risk management strategies later. For now, just remember that Forex trading involves buying and selling currency pairs to capitalize on their price movements. Section 4. The Forex players. Who's who in this global market? The Forex market isn't just you and me trading currencies on our laptops. It's a vast and intricate ecosystem with numerous key players, each contributing to the market's dynamics in unique ways. This ecosystem is composed of major financial institutions, central banks, hedge funds, and individual retail traders, all of whom play crucial roles in shaping the market. At the top of the hierarchy, we have the big banks, such as JP Morgan Chase and HSBC. These financial giants are responsible for handling massive transactions on behalf of governments, corporations, and other large entities. These banks drive the market's liquidity by executing large-scale trades that can significantly influence currency values. Their operations are essential for maintaining the smooth functioning of the global financial system. Then there are the central banks, like the Federal Reserve in the United States or the European Central Bank. ECB. These institutions have the power to control monetary policy, which includes setting interest rates and regulating the money supply. By adjusting interest rates, central banks can influence the value of their national currencies, impacting everything from inflation to economic growth. Their decisions are closely watched by market participants worldwide. Hedge funds and institutional investors also play a significant role in the Forex market. These entities manage large pools of capital and engage in sophisticated trading strategies to generate returns for their clients. And of course, there are retail traders like us. While we may not have the same level of influence as the big players, our collective actions contribute to the market's vibrancy and liquidity. Each trade, no matter how small, adds to the dynamic and ever-changing landscape of the Forex market. Section 5. Currency pairs, the heartbeat of Forex trading. In Forex, you don't trade individual currencies, you trade currency pairs. These pairs represent the exchange rate between two currencies. The most traded pair is EUR on USD, which stands for Euro and US dollar, followed by USD JPY, which is the US dollar and Japanese yen, and GBP USD, the British pound and US dollar. Each pair's value fluctuates constantly based on various factors, including economic data, political events, and even natural disasters. Understanding these factors and their potential impact on currency pairs is crucial for making informed trading decisions. Now that you know the basics of Forex trading, you're ready to dive deeper into the world of currency trading. Section 6. Trading Styles, Risk Management Tips. Effective risk management is crucial in Forex trading. Using tools like stop-loss orders can help limit potential losses. However, it's important to set these orders at appropriate levels to avoid being stopped out prematurely. Understanding your risk tolerance is key. Every trader has a different capacity for risk, and it's important to trade within your comfort zone. Overextending yourself can lead to emotional trading and poor decision making. High leverage is another double-edged sword in Forex trading. While it can amplify profits, it can also magnify losses. Using leverage without proper risk management can lead to margin calls and significant financial losses. Stay informed about global events and economic news. Political instability, economic reports, and natural disasters can all cause rapid changes in currency values. Being prepared to react quickly to these events is essential. Technical issues and platform reliability are also concerns. Trading platforms can experience outages or glitches, which can prevent you from executing trades at critical moments. It's essential to choose a reliable broker and have contingency plans in place. Keep a trading journal. Documenting your trades, strategies, and outcomes can help you identify patterns and improve your decision-making process over time. Ready to start trading? Check out the link to my recommended broker in the description below and register with at least $150. Also, find links to my favorite books on Forex trading. When trading Forex, it's essential to understand the different currency pairs available. The most popular pairs are the majors, which include EUR USD, Euro United States Dollar, GBP USD, British Pound United States Dollar, and USD JPY, United States Dollar Japanese Yen. These pairs are highly liquid and have tight spreads, making them ideal for most traders. Other popular pairs include AUD USD, Australian Dollar United States Dollar, USD CAD, United States Dollar Canadian Dollar, and USD CHF, United States Dollar Kichia, Swiss franc. Each pair has its own characteristics and is influenced by different economic factors. Understanding these dynamics can help you make more informed trading decisions. Don't forget to subscribe to our channel for more tutorials and tips on Forex trading. Hit the notification bell to stay updated with our latest content. What trading strategy do you find most effective? Let us know in the comments below. Recapping key points: effective risk management, understanding risk tolerance, staying informed, and keeping a trading journal are essential for success in Forex trading. Ready to start trading? Check out my recommended broker and favorite books in the description below.